Okay. Good evening, everyone. Welcome to today's class. Hope you all had a wonderful week. If you're joining us for the first time, welcome. Uh, okay, so from the last class, we did Bitcoin analysis on higher time frame, and I'll quickly review the last analysis we did. So we can move over to what we have for today. The last time, this is Bitcoin one day. We're going to remove the last drawings we made. So I remember that I had a trend from here. So from the last class, I had this uptrend, and I made mention of a rising wedge forming at this area. Okay, I made mention of this chart pattern forming at this area. So right now we are expecting a reversal in price of Bitcoin because a rising wedge forming after an uptrend, just as we've seen here, it's a sign of a reversal. So the target of Bitcoin, it's measured from here to here. Then after breakouts around this price, 80,000 to 70,000. So I have this area marked out for next Bitcoin drop. So this is all I have for Bitcoin today. We already did this analysis on the last class. If you didn't know how we arrived to this, you should check my last video. Oh my God. Oh. Okay, let me go live again. Okay. All right, I'm gonna resume the video again. Okay. All right. Good evening, everyone. Welcome to today's live class. I hope you all enjoyed your week. So I'll quickly start by reviewing what we did the last time, which was Bitcoin analysis. Let me share my screen. Okay. So from what we did the last time, this was Bitcoin analysis. So which we made our trend, and we made mention of a rising wedge forming after a breakout of a trend, which is a signal for trend reversal. So right now, the last time we made our analysis, Bitcoin was around this area. It was around 102 or 101,000. So right now we are the upper resistance of this reversal pattern forming at this area. So we are waiting for our breakout before we confirm the next move of Bitcoin, which is likely to be downwards because this is a reversal pattern. A reversal pattern that forms after an uptrend, it's a sign of a reversal. So means price it's going to drop, and this trend will change from being an uptrend to a downtrend, and this price is expecting to drop to these targets, which is gotten by measuring this area, this area to this area, then you place it at the point of breakout. Wherever it breaks out, you place it at the point, then you get your target. So I'm expecting Bitcoin to go all the way down here and here. So before we could know the next movement of Bitcoin. So right now we are still in this area. If you already had your short at this upper level, you will be in profit now, or you patiently wait for breakout for better confirmation, or wait for the last swing to be cleared out, which is around this area, around 90,800. A price moving all the way below this area will give us very much assured confirmation for our short. Although the targets might be short, but this is a clear indication that this market is in a downtrend. If you didn't understand how we get all this, we already made previous videos on when a price changes a trend. It needs to clear the first swing and the second one before it starts moving to a downtrend. When this happens, the price automatically enters a downtrend at this area. Then we would head downwards in any retracement into the any of this region. So whereby our analysis on the 1 day time frame have not played out. So we'll move out of Bitcoin because today going to Forex. I'm going to Forex. So going to review gold. So we're done with Bitcoin. So let me quickly check if there is any question before we move back. Okay, there is no question. So we'll move back to gold. So I have my gold review. Okay. Okay. So right now, this is gold. This is gold pair. So remember, if you're trying to make your analysis, first of all, you zoom out, try to zoom out to know what trend the pair you're trying to analyze is on. So right now, gold is in an uptrend, seeing that the price has been going up for a while. So we need to confirming gold is in an uptrend. So we need to review this recent price region to know what is happening in that area. So we'll go back to our recent price region. So let's see what is happening on gold. So this is our 1 day. Our 1 day, let's mark out the last two swing high and swing low on the 1 day. So is our last swing high on the 1 day. This the previous swing high as well. So our swing low is here. Our swing low is here. So on this 1 day, this being our uptrend on the 1 day, and we'll be making higher lows. We'll be making higher lows, but we made our first lower low on this region. So market. So we made our first lower low on this region, on this area. So now this is our, I'm trying to get a picture of what is happening in our 1 day. So getting a picture, we made our first low. Now this is a signal that gold is about to change its trend from uptrend to a downtrend, but we've not gotten our clear confirmation yet because this is the first lower low. Now gold is leaving us a range region of this area to this zone on this 1 day. If you're planning to trade gold on 1 day, this, I'm making analysis on the 1 day. Gold is leaving us a range zone on this 1 day on this area. So if we are supposed to trade gold on this 1 day, this area, it's always a no trade zone, because there is no confirmation of trend at this moment. Gold has been in an uptrend, but it made its lower low. Right now, we don't know if it's in an uptrend or in a downtrend. So we'll have our market range in this zone. Watch, the price of gold have not actually trended up for some days after this movement. Trying to mark it out. Okay. After this movement, this area, gold have not actually trended like it has been doing for a long time. So you notice this area, there is a slow movement because it's trying to change its trend. The market is trying to change its trend to confirm if it's an uptrend or a downtrend. I'm trying to explain what is happening on the 1 day. Mind you, you can always trade in any time frame you find yourself in. But on this 1 day time frame, let's say I want to trade on the 1 day time frame, I cannot make any trade. From this 1 day, we go down to 4 hours. From 4 hours, we go down to 1 hour, 15 minutes, and any lower we can go to get whatever we want to get. So now, gold is on this 1 day, it's on ranging. We call this area, you can call it range. It can range high to this point or range high to this point. Now, see what happens in this area now. Gold needs to reclaim this high. It needs to reclaim this high, this area. It needs to reclaim this area. Let me change the color to green. Gold needs to reclaim this area or lose this support. Let me change the color also to blue. So gold needs to lose this support or reclaim this high. If it reclaims this high, that means our trend will continue going up. If it loses this low, that means we are in downtrend. So in this zone, there is no trade. So this is how you make your analysis. First, try to picture out what is about to happen on the time frame you are currently on. If it's a no trade time frame, that means you need to go lower to another time frame so that you could find what you're going to trade with. So first you check your trend. After checking your trend, you mark out your swing high, and you mark out your swing low if it's an uptrend. But this is an uptrend, these are swing low, these are swing low. Then you check the last price. If it's cross this swing, last swing low, then if you cross this, check for this, the second one. If it didn't cross this, that means this is a no trade zone. This is a ranging zone. This price can go up to this place or come down to this place. So for you to play safe on this time frame, you don't trade on this zone. You go down to a lower time frame. Now, on this 1 day, we've already know that this is a ranging zone, but we need to still trade gold. So what do? We move over to our 4 hours. We are done with our 1 day time frame. Let's move over to our 4 hours. Okay. On 4 hours of gold, we could see, I need to delete from the 1 day. Let me delete so it won't be scattered. I don't want my chart to be messed up. So on these 4 hours, clearly we zoom out, we watch how the price has been trending, zoom over to the current price after the trending up. So we mark out our swing low to know if it's still active. Okay, so this was the last swing low on gold. So this, if you watch this swing, if you're yet to understand what a swing means, this is swing. So this is a swing. So a swing, it's okay. You can say equilibrium region where buyers and sellers find, sorry, oh, okay, find balance. So this is a swing, so where buyers and sellers find balance. It's just an equilibrium region. So in all these places we call swing high and swing low, it's an area of support where buyers and sellers find just a neutral point. So where the buyers were moving up at this place, which is called a swing. At this place, the sellers will take control and push it down. So this place, the buyers and the sellers are meeting at this joint. So you can call it a swing point. It's just an equilibrium region in a chart. So it is a swing. This point, this point, this point, this point, this point. So swing. This is swing low. This is swing low. This is swing high. This is swing high. So before we continue, so this is our 4 hours. Notice our 4 hours. We moved past the first swing, which is this one. Then the second swing, which is this one, we moved past it. Then the price got up again. Now, at this region, this is our first, lower low. This is our second lower low. Now, this is our higher low. Okay. This is our higher low. So now, the price have moved past the first higher low and the second higher low. Means our 4 hours, it's in a downtrend. After this movement, this was the confirmation of the downtrend of the 4 hours. So our 4 hours, it's in a downtrend because we moved past this low. If it's only this low, it's not confirmed yet. But with this low here, it's very, very confirmed that our 4 hours is in a downtrend. So did you see the difference of changing your time frame? On the one day, we are still to confirm our trend on the one day, but on the 4 hours, we're already confirming that our trend on these 4 hours is downtrend. Mind you, the trend on 4 hours is different from the one of the one day. So we can only trade with these 4 hours, and we won't extend any of our analysis to the one day. We only focus on these 4 hours if it's where we get our confirmation. Okay, so mind you, if price make this low, confirming that it's on a downtrend, you have to make other analysis to know where the price will go. Now, this will be your invalidation point. This will be your invalidation point. So now, this uptrend, it's going to invalidate again in this region. That is where it's going to invalidate again. Then then you are going to look for opportunities of selling any moment from now, because we are in a downtrend. And whenever you want to trade according to the trend. If market is trending up, always look for buying opportunity. If market is trending down, always look for selling opportunity. Don't trade against the trend. You will not be profitable. Not like you won't be profitable, but fighting against the market trend will always cause you more harm than good. It's always good to join where the market is going, so you'll be able to, even if you make mistake, since the market is trending down, it will always be in your favor. But when you trade against the trend, if you make a mistake, there might be no reversal. So that is the difference. Okay, now on these 4 hours, markets will look to move, to retrace. Maybe after this movement, sometimes it can go down without retracement. There is no guarantee, but whatever thing that analysis you should be making from this region, after this area, from this region here, from this region down, should be shorting analysis. Any opportunity you have, any information that you get from your own uh, from your own point of view, any way that works for you. But mind you, this is a downtrend, so you'll be looking for more shorting opportunities. So now we've already had our downtrend on 4 hours. So now, but we can't just make our analysis on 4 hours, because the market is still looking to continue on a downtrend. So we'll need to go down to our either 1 hour or 15 minutes. Sometimes I go down straight to 15 minutes to look out for an entry. That's what I do. So I go down to my 15 minutes, maybe too quick. Now, let me try. All right. So looking at my 15 minutes. Okay. This is I try to zoom out. So if you watch, this was an uptrend and this is a downtrend. Okay, now check the last swings of the uptrend on 15 minutes. Each time frame has its own trend. So you check for the swings of 15 minutes. You see, we had, let me not just start from let me start from anywhere. So these are swing of the uptrend of the 15 minutes. Mind you, I'm looking for my higher high and lower low. Okay. Okay. So this is our uptrend. Now on 15 minutes, this is the last trend. We had last low here and last low at this place. Now, from all confirmation, gold is on last swing. This first one, this second one, this is a downtrend automatically on this 15 minutes time frame. So whatever thing you are trading gold from here to anything, you should be looking for your shorting opportunity. Looking for your shorting opportunity. Any opportunity you have to make should be a shorting opportunity. So the markets will trend down the more than it will trend good. Okay, today is FMOC news. Today is FC. Okay, now quickly you see the reaction of the news. This is the reaction of the news. This is a very big dump on 15 minutes time frame. If you watch, the candlestick is very much bigger than whichever candlestick that has been on this area. So this is a news affecting the market. Now, a lot of people always try to be biased or try to complain that, but I always tell people to approach the markets the same way you approach a physical market. Make it be realistic. So if market is realistic to you, try to make all possible analysis be real. Don't, if there is news, if your analysis is correct, it will make your analysis play out faster. If it's not correct, your analysis will be invalidated. So if news goes against you, just know that whatever you're doing is not right. If your analysis is correct, news is always going to go in your direction. There is no magic about that. You don't need to panic if there is news or not. You can stay out of the market if at all you want to. You don't want to trade, or because it's so volatile, it's always volatile because it can make a spike up and down. But if your analysis is correct, news is always go to your direction. So this is the effect of the news playing out. And because our gold was in a downtrend, we had this big drop. So if we make further analysis, we could figure out whatever made gold go to this place it is now. So this is okay. So on gold being on a downtrend, you can actually trade whichever pattern you want to trade from this zone. Now this is a downtrend, so any retracement at all, we always make a lower low until there is a change of trend. So at this zone gold is now, even if gold comes up and make a move again, it will always go down because this is a downtrend. A downtrend is supposed to always go lower low until it makes a higher lower than the previous low. So if this high is low is higher than this high, that means this downtrend is about to change. But for the fact that the lows the lows keep going down, then the highs never meets the previous high. That means this trend is still active. So at this point, gold is still trending down. So you don't need to always confuse yourself with trying to draw a whole lot of thing in a chart. If you could be able to figure out your trend, that means you could always thrive in any market. Any other pattern you're using, any uh analysis you're making, first of all, know the structure of the market. Is this market I'm about to go in going up or going down? If you could be able to figure out the structure of the markets you are trading, every other analysis is simple. Whether you're using Fibonacci, whether you're using any indicator, whether you're using anything, but first of all, try to check the trend you are on. Let me on is Ketna's channel, or it acts at a Bollinger Band as well. So let me try it on it. Okay. Now this is my indicator on this 15 minutes. So let's say you want to trade, but if you confirm your trend from this area, you can always trade with the indicator because you have confirmed your trend. If you confirm your trend in a coin, trading with an indicator will be easy. Why a whole lot of people make mistake is because they always use indicator at any point in the market. You don't know where to apply your indicator. You don't know where to use your indicator. If you use your indicator rightly, they will always you will always be profitable, no matter any strategy you're using. But first of all, know where the market is going to. Know the structure of the market. If you could be able to picture the structure of the market, you should be profitable, even if you're using any strategy at all. It might not be my own strategy, the way I analyze my market. It might be your own strategy. But first of all, try to get where the market is going. If you be able to picture the structure of the market, you are good to go. Market does not change its structure with like change its structure one before it changes the structure. Something might signal you that, oh, market is about to change, let me wait. Patience is always the key. Just at this zone, see, this market was trending down at this zone, but if you're trying to use your Fibonacci at this level, trying to draw your Fibonacci at this level, it will not work out because at this region, the market is not in any trend. This region, market is not in any trend, this region. So trying to use any strategy at all in this region will always give you losses. It will always give you losses. So If you know your trend, you can apply any strategy at all. You will be profitable. Even if you're having a loss, it will be minimal. The area people make mistake, it's no trade zone. If you're trying to apply your strategy in area that is called no trade zone, you will always have losses. If you're trading if you're trading normal, if this is a downtrend, and you want to trade breakout of support, if you want to trade breakout of support if you want to trade breakout of support, you can always trade breakout of support. Since this is a downtrend, can always trade a breakout of support. If this is a downtrend, you will always be profitable. Even if you're having loss, it will be minimal. But if you're trying to trade this strategy at an area like this, or an area, or in an uptrend, you want to short at a breakout of a support, it will not work out. But trade alongside with the trend. Get your trend, then you can apply your strategy. I have my own strategy, you have your own that you learn from, but always try to get the structure of the market. So I don't know if there is any question. Let me quickly check if there is any question. Okay, right now there is no question. uh I assume you guys are following, but there is uh if there is any uh misunderstanding or the things you didn't get clear, so do drop the comments on this video or the next class. After this live video, it will always be on my page in case you want to rewatch whatever I said at this moment. You might not actually flow, or maybe when you watch it over and over again, how I went down from 1 day, 4 hours, any time frame at all, even if it's 1 minute time frame. But bear it in mind that it will always just trade alongside with the market structure, no matter any time frame. Even if you want to trade 1 minute, even if you want to trade 15 minutes, 1 hour, just know the time frame you're trading. The time frame will actually guide you to get the structure of the market, and stay on the time frame you're trading. If you're trading on 15 minutes, unless you have like a higher analysis to make that will make you go out of the area that you're trading, because there are some other things you consider. As considering the structure of the market, you can also consider your horizontal supports and resistance on higher time frame, because price might always act at those region. If you're using indicator, you can always, but first of all, confirm the trend of your market, then you will always be profitable in anything you're doing in the market. So that is my review on gold. I do not want to make further analysis on gold. So this is my review. Basically, our 15 minutes, it's on a downtrend. So we're always looking to see price going lower than it was. Mind you, our 4 hours, it's also on a downtrend. So gold 4 hours, 15 minutes are in downtrend. The 1 day, it's not in any trend. So we'll see the outcome of gold in next coming days. Since the 4 hours is in a downtrend, we expect to see lowers of low. 15 minutes, still the same thing until they change. But if they didn't change, the gold price will continue going down on 4 hours and continue going down on 15 minutes. On the 1 day, no confirmation yet. On the 1 day, anything can happen. So on these 4 hours and 15 minutes, we'll still be getting downtrend. So you always look to short gold at this 15 minutes time frame until anything happens, until otherwise. Then if the trend change, you always follow the trend as well. So guys, saying this is where I would end today's class. We've been able to check Bitcoin, we've been able to check gold for the first time. So the next class, I think I'll also look into the RAVE indices. So I'll be handling all of them. Every chart is the same, even if it's in crypto, even if it's in Forex, even if it's in indices, in stock. Bear it in mind that every chart is the same. There is no confusion. As far as it has candlesticks, they will always give you the same analysis when you break it down. So thank you guys for joining today. I'll be rounding up now, and I hope to see you guys the next time we'll be having our class before we wrap it up for the year. Okay. Thanks, everyone, and have a wonderful night and week ahead. Goodbye.